Zscaler stock has been one of the most controversial names in the cybersecurity sector over the profitability. After reaching highs above $300, the stock has fallen dramatically and is now trading around $122 per share. But here's the interesting part. Wall Street analysts believe the stock could have significant upside from current levels. So the big question is Zscaler a hidden opportunity, or is Wall Street being overly optimistic? In today's video, we'll break down the company's fundamentals, growth prospects, analyst forecasts, risks, and whether Zscaler stock is worth buying right now. Let's get started. Zscaler is a leading cloud cybersecurity company that helps businesses secure their networks, applications, and remote employees. Unlike traditional security solutions that protect a company's physical office network, Zscaler operates using a cloud-first approach. As more organizations move to cloud computing and remote work environments, demand for Zscaler's services continues to grow. The company serves thousands of enterprise customers worldwide, including many Fortune 500 companies. Cybersecurity remains one of the fastest-growing technology sectors, and Zscaler is positioned as one of the industry's key players. Let's talk about the stock itself. Zscaler shares currently trade around $122 per share. While the stock has experienced a major decline from its all-time highs, investors should remember that many high-growth technology companies went through similar corrections after the pandemic-era boom. The market has become more focused on profitability rather than growth at any cost. This shift has placed pressure on many software and cybersecurity stocks, including Zscaler. However, the recent decline may also be creating an attractive entry point for long-term investors. One of the most bullish signals comes from analyst forecasts. According to current estimates from over 40 analysts, average price target $192.67. Current price $122.11. Expected upside approximately 58%. Even the lowest analyst target stands around $145, representing nearly 19% upside from current levels. Meanwhile, the most optimistic forecast suggests the stock could reach $250, implying more than 100% upside potential. In addition, analyst sentiment currently sits in the strong buy category. This indicates that many professional analysts continue to believe in the company's long-term growth story despite recent stock weakness. Now let's look at the company's financials. Zscaler currently generates approximately $2.67 billion in annual revenue. That's a strong figure and demonstrates that demand for its cybersecurity solutions remains healthy. The company also has a market capitalization of roughly $20 billion, making it one of the larger cybersecurity firms in the industry. However, investors should be aware of one important concern. The company is still reporting negative EPS of approximately minus 0.49. Net income around minus $41 million. In other words, Zscaler has not yet fully transitioned into consistent profitability. This is one reason why some investors remain cautious. Growth companies often trade at premium valuations, and if profitability takes longer than expected, the stock could remain volatile. So why are analysts still bullish? There are several key reasons. 1. Cybersecurity demand is exploding. Cyber attacks continue to increase worldwide. Businesses, governments, and organizations are spending more money than ever to protect their digital infrastructure. Cybersecurity is increasingly becoming a necessity rather than an optional expense. 2. Cloud adoption. Companies are moving applications and data to the cloud. This trend directly benefits Zscaler because its platform was designed specifically for cloud-based security. As cloud adoption grows, Zscaler's addressable market expands. 3. Artificial intelligence. AI is transforming the technology landscape. While AI creates opportunities, it also creates new cybersecurity risks. Organizations need stronger security tools to defend against increasingly sophisticated threats. This trend could provide another long-term growth catalyst for Zscaler. 4. Enterprise customer expansion. Large enterprise customers often increase spending over time. As organizations adopt additional Zscaler services, revenue growth can accelerate without the need to acquire entirely new customers. This creates a powerful recurring revenue model. Of course, no investment comes without risk. Risk number 1, profitability. The company still reports losses. If profitability continues to be delayed, investors may lose patience. Risk number 2, competition. The cybersecurity market is highly competitive. Major competitors include companies like Palo Alto Networks, CrowdStrike, Microsoft, and others. Maintaining market leadership will require continued innovation. Risk number 3, market volatility. Technology stocks can experience significant price swings. Even strong businesses can see large stock declines during periods of economic uncertainty. Investors should be prepared for volatility. Looking ahead, the long-term story remains compelling. Zscaler operates in a massive and growing industry. Revenue growth remains strong. Wall Street analysts continue to maintain a favorable outlook, and the stock currently trades far below its previous highs. For long-term investors who believe cybersecurity spending will continue growing over the next decade, current levels could represent an attractive opportunity. However, investors should recognize that the path forward may not be smooth. The stock could remain volatile until the company demonstrates consistent profitability. So, is Zscaler stock a buy? Here's the bottom line. Bull case, strong buy, analyst rating nearly 58% average upside target. Growing cybersecurity market, strong revenue growth, long-term cloud and AI tailwinds. Bear case, still not consistently profitable. Intense industry competition, potential short-term volatility. Overall, Zscaler appears to be a high-quality growth company with significant long-term potential, but investors should expect volatility and manage risk appropriately. If the company continues executing successfully and moves towards sustained profitability, today's share price could eventually look very attractive. What do you think about Zscaler stock? Is it a buying opportunity, or do you see more downside ahead? Let me know in the comments below. And if you enjoyed this analysis, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss future stock market updates. Thanks for watching, and I'll see you in the next video.